An April issue of The Real Deal featured an article that Fannie Mae keeps a secret blacklist of 1,400 condominiums that they will no longer finance. This list is growing, and it's currently 1,700 from what I'm hearing. It supposedly exists to protect borrowers from unsafe and financially unstable buildings. Hi there, I'm Tom Day with EXP Realty. I've been serving South Florida since 2006. I'm going to tell you why this is a significant story unfolding and how it affected me personally. If you own a condo in Florida or are considering purchasing one, this could affect you as well. So stay tuned. I hope that if you find this information useful, you'll subscribe to my channel and hit that like button for me. I appreciate it. Okay, this story is significant because Fannie Mae buys loans from banks, credit unions, and other lenders that meets their standards and packages them as mortgage-backed securities. These package loans are then sold to institutional investors. This is the secondary market. Condos that meet their standards have better rates and lower down payments from 5 to 20%. These loans are known as conventional type of financing. There are fewer lenders that will lend to condo projects that don't meet Fannie Mae eligibility. They will have interest rates generally 1% to 1.5% higher and have down payments that are 25% or more. For some reason, this list is only shared with lenders. The only way most buyers find out is when they are turned down for a loan because the condo that they are buying is on the list. Common reasons for making the list are insufficient reserves for repairs, insufficient insurance, and pending litigation. Florida is among the states with the most condos on the list. California is another. This is one of the fallouts of the looming insurance crisis in Florida and the incident in Surfside, Miami, where a condo building collapsed. I myself learned about this the hard way. My own condo is under contract and ready to close. I had moved out, in fact. The deal fell apart at the 11th hour. This happened because of recent changes to the association's master insurance policy. The association insurance provider we had pulled out of Florida. That policy expired on July 1st of this year. My deal was supposed to close on July 22nd. The deductible on the prior policy was 5% of the claim. The new insurer would only insure buildings with a 7.5% deductible. That was all it took. Because of that change, my condo was no longer Fannie Mae eligible. When the lender found out, the deal was dead. I can see this happening all over Florida. My condo is in a massive complex, literally thousands of units across more than a dozen associations. Mine happened to be the first association where this problem popped up. If it happened to mine, it can happen to others. It will likely affect older buildings more, and there are a ton of condo buildings built in the 60s, 70s, and 80s in South Florida. Blacklisted condos can still get financed using non-conforming type of loans, usually at a higher interest rate. This blacklist, we're told, is only about 1% of all the condos across the country, so far anyway. If you're purchasing a condo and counting on a lower down payment at a decent rate, relatively speaking anyway, be sure to ask your lender if it's Fannie Mae eligible before you go viewing them and making offers. Save yourself some time, trouble, and expense. This could certainly have impact on values if it becomes a widespread issue, and I suspect it could. Time will tell. What do you think about this? I would love to hear your comments. I'm Tom Day. Thanks for watching.